Welcome. You're watching the Mutual Fund Show on NDTV Profit, and I'm your host, Samina Nalwala. As always, the show aims to bring you actionable insights from the mutual fund industry so you can make smart choices when it comes to your investments. Today on the show, we have with us Manoj Chand, co-head product strategy of WhiteOak Capital AMC. Manoj, thank you very much for joining us in the studios today. I believe you've recently launched a Special Opportunities Fund. The NFO opened on the 15th May and closes on the 29th May. You want to tell our viewers everything about the Special Opportunities Fund before we dwell more into it?
Sure. First of all, thank you so much for inviting me. So this is an open-ended equity mutual fund scheme, actively managed. We are basically looking for opportunities created by some unique events, commonly refers to as special situation. Because of these events, sometimes stocks are trading below their intrinsic value, or called fair value. These events can be positive event or can be negative event. Sometimes market do overreaction to some negative event, because of which ideally stock price should be corrected by, let's say, 10%, but is down by, let's say, 20%. So it creates an opportunity for active fund managers like us that we take advantage of this mispricing. Sometimes there is some positive news created by some event. We will discuss about those events as well. But market is pessimist and they underreact to that positive development, and maybe stock should be up by 100%, but it is up by, let's say, 20-30%. Yeah. Again, it creates an opportunity because the intrinsic price or intrinsic value of that stock has went up after this positive development, but the market is not appreciating that good news. So again, we will be looking for these opportunities. Some of the examples of these special situations can be, let's say, regulatory actions, policy actions. It can be corporate restructuring like delisting, demerger, etc., spin-off. It can be geopolitical events. It can be disruption by new technology, etc. So yeah, we will be looking for these opportunities.
So just to break this down so we understand special opportunities, situations or special situations better, assuming there is an event and the reaction is far worse than expected, or the impact it's going to have on the company's operations, how long before you actually say that, you know what, well, I've taken that stand, gone out and bought the stock because it is a special situation, but you may not have seen a recovery come through. So how much time do you give an investment or a stock either on the upside or the downside?
So yeah, good question. First of all, there are a set of companies which we will avoid, because there are certain companies which will always be in special situation. So they are cheap for and they will become cheaper next year. So we have a list of companies which we are comfortable with. If any of these companies are facing some special situation because of which stock price has corrected significantly, we may or may not wait to enter. Sometimes you will see that market will start appreciating that company price should be on the higher side, maybe in 3 months, sometimes 6 months, that we don't know. But if we find that the prices are available at a steep discount and we have a strong reason to believe that the problem is temporary and it can be solved very easily by the management, we will jump onto those opportunities.
Now, Manoj, this is a very interesting strategy, because I'm assuming if this is based on special situations, very rarely can you predict a special situation. Usually negative, if it's regulatory driven, it's very tough to call these things, and hence you see the kind of reaction that you see on some of these counters. What is the process of identifying a special situation? Is it more at a macro level or a micro level in terms of stocks? And once identified, what is the approach? How do you put a stock on the radar? Because you can't predict a special situation in that sense, and hence it's special.
Yeah, that's true. And we are not trying to predict the special situation themselves, by the way.
Correct, yeah.
We are just saying that after event taking place, we will analyze whether the reaction by the market participants, is it overreaction or underreaction? Let me give you an example. Like few years back, when government formally introduced PLI, Production Linked Incentive Plan. So that development was very positive for some of the manufacturing sector companies, specifically those who already were doing very good job. So now in that situation, you can see that there are a couple of players who are doing fantastic job, but market is not appreciating this new development and they will be benefiting out of this new development hugely. So you may decide to buy. Let me give you one more example. Recently, when geopolitical tension happened between Russia and Ukraine, suddenly the entire focus was shifted towards domestic defense capability building.
Yeah.
So that was very positive for domestic players in the defense and aerospace business. Again, if you see that market is not giving enough benefit to this new development, you may want to jump in this case.
Right. Manoj, you want to walk me through the process of identifying these situations, and also what are the caveats that you want to give out to investors who are watching the show, trying to learn more about this fund, the primary objective, the risk that one needs to keep in mind as well?
So 2-3 things. First of all, we will be looking at these opportunity across sectors and across market capitalization. So it is going to be a flexi cap strategy at the heart of it. But because of the fact that we are buying companies, mostly those stocks which are contrary to market belief. You are not buying consensus stock, you are buying non-consensus stock. That is the reason why they are trading below their intrinsic value. So that means there will be a tilt towards contrarian bet, which also means if you compare this portfolio with any other traditional flexi cap portfolio, the top 10 holding of this flexi cap strategy, special situation category, will be very different than a traditional flexi cap mutual fund scheme.
Obviously,
Which further means that if you are buying a portfolio which has a very high active share, or basically the how much portfolio is different from the benchmark. So here the portfolio will be significantly different from the benchmark, which also means that on a day-to-day basis, NAV movement can be slightly different than the benchmark. So for first-time investor, I still believe that categories like flexi cap fund, large and mid cap funds are the better category to start with. But anybody who already have a investment in some flexi cap fund or large and mid cap fund looking for add another flexi cap mutual fund scheme, I think these are the schemes which are in true sense provide diversification benefit, because in true sense you are buying another strategy which has a different portfolio altogether. The caveat here is that not all special situations are special opportunities. So sometimes there are reasons behind why the stock price is corrected, and sometimes the business model itself is sham. And you find that there are a lot of examples in India itself. So for that you need expertise, and at WhiteOak, as you know, that we have a large investment team. Also we have in-house forensic capability also. We have a dedicated resource, and the whole job of that dedicated resource is to look for red flags. So we are not looking for each and every special situation. We are looking only for opportunities created by some of these special situations. So we may avoid many of these special situations. We may not want to participate in each and every.
Would you be able to tell us what these situations currently are that you've identified that make a good opportunity for investment? You don't need to talk to me about stocks, but any sort of themes or sectors that are currently picked up and identified by the team?
So for example, let me give you an example of special situation which are very recent. Recently we have seen regulator taking action on some financial institutions, financial companies. So now in this environment where every month or so you are getting some new stock in news in the financials, you may pick some stocks which you believe are great company. And the problem is that when you pick great company, they are rarely cheap.
Yeah.
So because of these regulatory actions, some of the great companies are available at a fair price or maybe below their fair price. Now it creates a lot of good opportunity for active managers like us.
Okay, and what is the average number of stocks that you hold in this fund?
So we don't have any, I mean, as you know, it is an NFO and we don't have any number in our mind. It all depends how much opportunities we are getting, and so we don't want to put any number to it. But is it going to be a very, very concentrated 20 stock portfolio? I don't think so. That is the that is what we are looking at. But obviously, just to give you a reference, is it fair to expect that from a typical traditional flexi cap mutual fund that we are also running, you can expect on a longer period of time, on an average, the number of stocks will be lesser than traditional flexi cap mutual fund? I think it is a right expectation to have.
Also, help me break this down and tell me if this is a fair understanding. Because it is a niche sort of offering and there's not too much to compare it to in the market, would it be a fair assumption that a fund such as this cannot be part of your core portfolio? It should be part of a satellite portfolio. Is that a fair way of reading it? And if yes, what percentage of one's equity active allocation could one consider investing in the WhiteOak or Special Opportunities Fund?
So first of all, I'll tell you, this is a difficult category. And not everybody and anybody can launch a fund in this particular category, because you have to be constantly looking for opportunity across sectors and across market capitalization. As I said, we have a very large investment team, one of the largest in the industry. So our investment universe is about 1,000 companies. Okay, so I think we strongly believe that we have the right capability to do justice to this category, and hence I strongly believe that not every mutual fund house will be able to not only launch product in this category and to do justice to this category. To your second part of your question, I think, as I said, that anybody who already have investing experience in equity mutual fund and looking to diversify further. So if you are already a flexi-cap mutual fund investor, you are buying another flexi-cap mutual fund, okay, and the overlap is about 90%. So, okay, you are just adding another scheme, you are not diversifying your portfolio.
And then you don't have a concentrated portfolio, so you can't beat the market.
Yeah, if you end up buying up the market, you cannot beat the market. So here, in true sense, you are diversifying your portfolio because the underlying theme necessitates us to take contrarian bet, because we will be buying companies which are non-consensus, which are basically market have given up on those companies for some reason. Maybe they have good reason to believe. And hence, I think anybody and everybody who is existing flexi-cap, multi-cap, large and mid-cap investor looking to add another scheme in the equity space, I think this can provide a true diversification. So depending on their existing equity allocation, I mean, the next allocation can go to this product. And as I said, this should not be your first equity mutual fund scheme for lump sum. Maybe for SIP you can still consider. But for first time investor, I think flexi cap, large and mid cap, large cap are
ways
better.
To learn in the market.
Yeah.
Right. Also, in terms of, and of course, you can help me understand this. I haven't personally come across many special opportunities fund. Are there other fund houses that have a similar offering to
I think there are about at least 4, I know 4, which are existent in the market. And I think along with us, a couple of more fund houses have filed with SEBI. So you will see some action.
Some more in the pipeline. Also, given that this is relatively higher risk in that sense, would it be a fair assumption to expect higher returns? And I know there's no way to predict future returns, but and this is a qualitative answer I'm seeking, because high risk should commensurate high returns.
Sure, it is a thematic fund whereby at least 80% of the portfolio should be invested in special situation stocks. So to that sense, yes, you can. If you have to compare it with the flexi cap strategy, so you can say the alpha volatility will be higher as compared to flexi cap fund, which is more balanced in terms of various factors. So I want to believe that when you give freedom to a fund manager, and if you believe that the investment team is good, so that freedom, the investment team can use that freedom to potentially generate more alpha. But because here you can deviate too much from the benchmark, the volatility of alpha is something you have to be mindful, and hence you should be okay to see volatile alpha.
Yeah, swings, big swings. What is the average recommended time horizon for one to stay invested in?
I think minimum 5 years. That should be your. I mean, when you are investing in a thematic fund, equity fund, for example, at least 5 years something you should have in your mind.
And this is the theme that is sector and timeline agnostic in some sense, right? So sector agnostic for sure.
Sector agnostic and market cap agnostic.
Market cap agnostic. Right, I think we've covered everything. Just a quick last question. You want to take us through who the fund managers are and if they manage any of the funds in the fund house?
Yeah, so Dhiresh will be managing this one. And Dhiresh is a very senior resource with us, and he is managing a healthcare fund as well.
It's another thematic fund.
Yeah, and also he's a co-fund manager in many of our other schemes as well, equity schemes.
And ideal way of investing, lump sum or SIP?
It all depends on your existing
portfolio,
risk appetite, investment horizon, etc., etc.
Right, Manoj, thank you and congratulations, and also good luck with this NFO. Remember, viewers, if you're interested and keen to invest in the WhiteOak Special Opportunities Fund, the NFO is open on the 15th of May and closes on the 29th May. Today we're joined by Amit Kukreja, founder of AmitKukreja.com. Hi Amit, it's Samina from NDTV Profit.
How are you?
I'm very well, how are you?
Good, thank you.
Amit, just before we came into this break, I was talking to Manoj of WhiteOak Special Opportunities Fund. It's a very interesting one. Assumption is it's high risk, high return, thematic in nature. I want to get your view on this one. I also I'm aware that up until recently, WhiteOak was very famous or popularly known for its PMS and AIF strategies. With its venturing into the equity mutual fund space, this is of course the 11th NFO. What do you make of it? Have you read about it, heard about it, talked about it? Would you recommend this to your clients?
So I know about WhiteOak products, and I think they are doing well. I'm also aware how the leadership team is continuously working to add value in their product space. This particular product that you were referring to is a special opportunity product where I think there is fair bit of value fund ideas which have been implemented or which will be implemented to create alpha for the investors. Now, in terms of other product space, I think they have delivered decent value in last few years, in last 3 to 4 years, ever since they started, because their technical team is very strong. There's a big team of investment analysts and the fund managers who have put together a solid proposal, who have a very good pedigree of having worked elsewhere. So it's a good leadership team and early stage, but I'm sure they're going to do well in this space.
Well, that we'll have to wait and see. But yes, it's a flexi cap fund with a very interesting proposition where they identify special situations and, of course, then go out and buy the stock in their portfolio. But like the fund manager explained to us, it's not for a retail-ish new investor in that sense. But anyway, Amit, let's move on and talk about our queries. We have a query coming in from one of our viewers, Pranab Gupta. He's 62 years of age. And his goal is to create a corpus of 1 crore rupees. So we've got to do a little bit of backward math over here. His question is, I want to start an SIP of 3,000 rupees each in 10 mutual funds for the next 5 years. Can you recommend the necessary funds for my portfolio? So I think,
So first of all, I want to tone down his
expectations. Yeah.
So he's hoping that just by investing 3,60,000 in 1 year, which comes out to be 18 lakh in 5 years, he will reach the milestone of 1 crore in 5 years. 18 lakhs of investment through systematic monthly plan, turning into a total accumulated value of 1 crore. That's absolutely impractical expectation, just so that he familiarizes himself with the reality. I was doing simple numbers for him. For a growth of 8% per annum, given he's 62, I'm not sure about his risk profile. Given he's 62, if the portfolio is going at a rate of 8% per annum, he'll be able to accumulate about 22 lakhs. At 9%, he'll be able to accumulate anywhere between 22 and 23 lakhs. And at 12% per annum, he'll be able to accumulate 24 lakhs. Anything more than that, obviously, accumulation is going to be going about 24 to 26, 28. And just a 5 year horizon. With equity investments, we always say keep a long-term horizon of 8+ years. I want to just comment from a behavioral expectations aspect point of view. Because of the rally, because of the bull market that we have seen in last year and a half, these sentiments have suddenly turned towards quote unquote greed or unrealistic expectations. So it's not going to be easy for anybody to reach a mark of 1 crore. Be it stocks or be it mutual funds. If you have a knack for technical evaluation of a company of stocks or a group of stocks, you can evaluate that. But I don't think it's possible to accumulate 1 crore with the total net investment of 18 lakhs in 5 years.
Right. Amit, while it's all about power of compounding, and I think we are cognizant about that, but yes, a 1 crore number with a 30,000 rupee monthly allocation is extremely far-fetched in that sense. But if I had to work this backward, if we do, one way to do this is, of course, increase your allocation monthly, or alternatively reduce your goal. What I also want to ask you is the way of investing, right? Do you think maybe making a little bit of a lump sum investment could help him reach his goal earlier than it would if it was just an SIP?
Yeah, I mean, I can simply run the
that'd be great, actually.
If I make an investment of 50 lakh rupees now, growing at 12% per annum, it'll turn into 88 lakhs. If I make it 60 lakhs, in 5 years, growing at 12%, it'll turn into 1.5 crore. So if he has a lump sum 60 lakhs ready, he can invest with an expectation of 12% per annum. As I said, 5 year is too small a window. So 60 can turn into a crore plus in 5 years.
And if he's doing about 3.5 lakhs annually, which is about 3,000 rupees across each fund for the
30,000 per
where
month.
where is he going to get to at the end of 5 years realistically?
Somewhere between 25 lakhs and 30 lakhs if the ROI is more than 14%.
And that is being realistic. So I think, Pranab, that's most important. You've got to keep the time horizon in mind. Asset allocation also is extremely critical. We have no idea whether you have equity heavy or debt allocation in your portfolio, but keeping your age in mind as well. You want to build a portfolio that has risk adjusted returns, and the long term returns on equity is 12%. So keep your expectations real. And of course, if you do make that investment of 3,000 rupees across 10 mutual funds every month, you will get closer to 25 lakhs over a 5-year period. To hit about a crore in 1 year, you have to look at about a 65 lakh rupee lump sum investment in the market, which we're not recommending, but that's the goalpost if that's what you want, or rather the road to the goal that you want. Well, we have another query coming in now, and this one is from Lakshmi Narayan. She's 42 years of age and her goal is 3 crore rupees. She hasn't mentioned the time horizon though. She says, I've invested 4.3 lakh rupees lump sum in mutual funds, 13.3 lakh rupees in the Sukanya Samriddhi scheme, 3 lakhs in SGBs, 8 lakhs in fixed deposits, 2 lakhs in the RBI floated bonds. Will these investments help me achieve my lump sum return goal? My current mutual fund portfolio is as follows: HSBC Small Cap Fund, Parag Parikh Flexi Cap Fund, Canada Robeco Blue Chip Equity Fund, Motilal Oswal Large Cap Fund, SBI Magnum Children Benefit Fund, and DSP Multi-Cap Fund, and the SBI Energy Opportunities Fund. Amit, I don't know about you, but I feel like she's got way too many funds on her portfolio, and they seem to be a little spread all over the place in that sense.
Yeah. So two comments. One, we don't know the horizon by when she wants to accumulate 3 crore. So it's very difficult for us to tell us whether she will be able to hit the milestone or not. If she's 42 and if she's looking for achieving this figure in 18 years, let's say until she turns 60. So I'm going to just do a simple math here. And she's getting 18 years. She would need an SIP of about 15,000 rupees a month if she has a current value of 50 lakhs accumulated in 18 years to turn that corpus into 3 crores with an aggregate rate of return of 12%. I don't know if that will help her. But in terms of schemes, what she needs is, what Lakshmi needs is just one good flexi cap, one good mid cap, one multi cap, and a couple of index funds. Right now, she has a lot of mutual funds. And I see there are a couple of large caps, there are a couple of multi caps and thematic also. The list should be reduced significantly to no more than 6 mutual funds. At least she can start with stopping the SIPs. I'm not saying that she should redeem all, but at least reduce the SIPs to a smaller set of mutual fund schemes and make it at least 15 to 20,000 rupees per month to achieve the target corpus of 3 crores in 18 years. That's assuming she wants it all by 60. That's all I can comment. Sovereign gold
she's
bond
also
is...
got a significant amount of money in the Sukanya Samriddhi scheme. She's got SGBs, which over the long term do pull out returns of 12%. And she's got about 8 lakhs in fixed deposits and 2 lakhs in the RBI floated bond. Would you recommend looking at maybe tax efficient, return efficient products instead of staying with the conventional fixed deposits?
Yeah, it's a good query. It highlights why the financial planning conversation needs to have a lot more details. The fact that she has a Sukanya Samriddhi scheme is telling me that she has a girl child. She's trying to prepare for funding her education. The fact that she has gold, naturally affinity for gold in women, and naturally she might be wanting it to be part of her retirement portfolio. The fact that she's having RBI floating rate bond, which means she could be a homemaker or she could I don't know, because people who take RBI floating rate bonds are either senior citizens or the ones who need passive income because they are exploring things in life. They want to figure out what's their next. Maybe she's a very conservative investor. We don't know. We are playing a guessing game here. At the same time, she's investing in flexi cap and thematic and sectoral funds besides gold and mid cap funds. So we are making too many
Guesses,
assumptions
yeah?
about Lakshmi, and there's a lot that she's trying to elicit from us. We are happy to help, but had it been a little bit more specifics in terms of what is the mapping towards the goal and what is
Yeah.
her investment objective and horizon, we would have been a lot more helpful for her.
You're right. I think their strategy is missing in the the portfolio. Looks like an amalgamation of products as opposed to products being, invested into for the long-term keeping the long-term objective in mind. But of course, Lakshmi, if you're seeking advice, you can of course connect with Amit and he can break that down for you. But with that, we're completely out of time, Amit. Thank you very much for joining us, and thank you viewers for watching us. This is the end of the edition of Mutual Fund Show.